Good afternoon, ladies and gentlemen. This is Brian Dewhurst bringing you your market update and Bitcoin briefing. Let's get after it. The year is almost over. A lot to be thankful for. Look at these numbers. S&P 500 up 24.46%, Nasdaq up 28.81, Dow Jones up 20.13, gold at 14.6, and Bitcoin still king, 121.97 after a hellacious couple of years. Let's get to the charts. S&P 500 daily. We've talked several times about this box, this trading range that we've been in, and we were breaking out up here, used it as support, and now we were bounced off, and that's you can kind of see the slingshot effect as we start a new trend. Very bullish. You see the moving averages, the prices on top of the moving averages. We got all 6 green dots here, and the teal bars are starting back up down here on our squeeze indicator. So very bullish. Let's go to the weekly chart. You kind of get a zoomed out view of that box, and you can see the price is moving on out. Again, on this longer term time frame, all the indicators looking strong and positive. We should be open to higher prices. And in the monthly view, you can see the strength and breadth here. The moving averages are widening apart, which shows it's very bullish, and the teal bars are intact with the squeeze. So this is a very powerful move to the north, to the upside. And let's look at the NASDAQ on the monthly. Looks very similar. Really nice breadth between the moving averages, our 6 green dots, teal bars on a squeeze. So very bullish. We should be open to higher prices. Again, we're not predicting things. We're talking about probabilities of future prices. And yeah, again, we are going to keep talking about gold as well. Gold is kind of pulling back. This is a monthly chart. But 6 green dots as well, teal bars. So very bullish. Should be open to higher gold prices over the longer term. I've got some stats on gold here coming up. Want to keep this brief today. And then I put some support and resistance line on Bitcoin just because it does move so volatilely, rapidly. I don't even know if volatility is a word, but looks pretty brutal. This is a daily chart, so pretty zoomed in. It looks pretty brutal in the daily. Looks like it's got rough road. It's going to retest 72.45 potentially. So yes, you can see 6 red dots there. So complete opposite, and momentum on the squeeze indicators fading lower. So, but you can kind of see the support and resistance levels there with the lines. Kind of touch on that more. I thought this was interesting. Central bank net purchases of 156 tons of gold in Q3. Brought the year-to-date total to almost 550 tons of gold purchased by central banks in 2019. There's a massive purchase in Q3 of 2018, so that's why it looks like it was down quarter over quarter. But year over year, gold purchases up 12% in global central banks. And then from this cat, Charlie has a lot of great data talking about S&P at all-time highs. This was as of, I can't remember the date. Yeah, 11/1, so a couple weeks ago. But 16th time this year, 223rd time for this decade. And he kind of walked through the different decades and how often the markets have hit new highs within the decade. So this is a couple weeks old, so it's probably beating the 60 to 69 time period now, but long ways to go to hit the 310 in 1990 to 99. So again, we should be open to higher prices in stocks amidst all the turmoil. I know there's a lot of things going on in the world. You got Hong Kong, you got South America, Iran just torched the central bank. Yeah, there's a lot of weird stuff going on. The president is going through an impeachment trial. All that's priced into the market, though. The market is saying it's comfortable with all that stuff. So this cat, Eric Voorhees, has a lot of good information as well on Twitter. It's talking about the 10-year treasury rate over the past 60 years. Federal government has 22 trillion in debt. That number is actually 23 trillion now, and each additional 1% rise in rates is 230 billion in additional annual expense. 3% rate increase, still below norm, adds more interest payments annually than the entire military budget, and why we are saying rates could be lower for longer because of this debt load. And then here, Charlie's got another fun fact. Rate cuts in 2019. Our Fed has cut 75 basis points. ECB, which is the euro, is 10 basis points. Denmark, Australia, Brazil at 150 basis points. Russia at 125. For those basis points, there's 100 basis points per 1%. So if it's 125 basis points, it's 1.25% cut. India's at 1.35% cut. China's cut a little bit. Mexico, Indonesia, you get the idea. Lots of people. Look at Turkey, down 10% cut. So anyways, it's assets are own real estate, own the stock market. Businesses are profitable. Unemployment is low. Inflation is in check. And like I keep saying, we should just be open to higher prices in the stock market, despite what I call headline risk of, you look and you watch TV and sometimes you want to put your money in a mattress. But the stock market's up almost 25% year to date. So yeah, and international returns are coming in. I'm going to cover international returns next month. It's been choppy over the last several years, but international is starting to swing positive as well, which is bullish for diversified portfolios. So that's all I got for you today. Really, Philip and I just hope you have a wonderful Thanksgiving. If you have questions on your personal plan, please reach out to us at www.uncommonwealth.com. Also, you can check out our podcast at the Uncommon Life Project on iTunes. And feel free to schedule a free call with us through our website. And I hope you found this valuable and informative, and look forward to speaking with you soon. Thanks, everybody. Bye-bye. The material in this video has no regard to the specific investment objectives, financial situations, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or an offer to buy or sell a security or any other related financial instruments. Nor should any of the content be taken as investment advice. Any of the opinions expressed in this video are subject to change without notice, and Uncommon Wealth Partners LLC is not under any obligation to update or keep current the information contained herein. Uncommon Wealth Partners LLC and its respected officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. Uncommon Wealth Partners does not accept any liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decisions.